Welcome back to the deep dive. If you're trying to track the next wave in institutional finance, well, you might want to pay close attention today. We're diving into the crypto product landscape, and honestly, what we're finding, it feels less like a slow regulatory crawl and more like a proper land rush.
Yeah, land rush really captures it. It's pretty unprecedented. We're not just seeing a couple of small funds dipping a toe in anymore. No, this is a massive and frankly accelerating surge in filings for crypto exchange traded products, ETPs or ETFs, depending on where you are. It's genuinely sweeping the global market right now.
Okay, so our mission today is to try and make sense of it all. We need to unpack the sheer scale of these filings first, then figure out which assets are really leading the charge, because the results are quite surprising.
Yeah.
And fundamentally, what does all this activity mean for you, whether you're investing, trading, or just watching the whole crypto space try to, legitimize itself?
Right. And just to put a number on it, the key metric defining this rush, we're tracking around 155 pending product filings right now, and these cover exposure to at least 35 different digital assets globally. That range, that's what makes this feel different.
And the detail that really jumped out at me from the data we looked at, it's the intense competition right at the very top. You've got Bitcoin, obviously, the flagship, but it's basically neck and neck with Solana. Both have roughly 23 pending ETP filings each. That really changes the story, doesn't it? It's not just Bitcoin anymore.
It absolutely does. Let's break down that filing volume a bit more because it shows where institutions are focusing their efforts, or at least their intent. So out of that pool of 155, the top four tell a really interesting story. Like you said, Bitcoin and Solana lead around 23 filings each, but right behind them, XRP with about 20 filings, and then Ethereum rounding at the top four with maybe 16 or so. So it's definitely not just the old guard. Seeing 35 different tokens, I mean, that ranges from the giants right down to much smaller projects. It signals a pretty profound shift, right? So why does this huge volume matter so much for, say, traditional investors?
Fundamentally, it's about access. It's about lowering the barrier to entry. What we're seeing is asset managers getting ready for potentially massive crypto exposure, but through regulated channels, like ETFs. This basically removes the need for traditional folks, maybe a retiree, maybe a big pension fund, to mess around with holding crypto directly.
And just for anyone not familiar, what's the barrier there? What's being lowered? Is it just paperwork?
Oh, it's much more than that. It's
Yeah.
security, it's complexity. We're talking about avoiding things like cold storage, which means you don't have to worry about managing these complex private keys or the security risk if you use an exchange or, the nightmare scenario of losing your hardware wallet and your funds are just gone. With an ETF, you just buy a normal ticker symbol through your broker. Easy. And the asset manager handles all that back-end custody and security stuff. That's a huge difference. Shifting that security burden from the individual to a regulated institution. Okay, so this also means altcoins like Solana and XRP are moving beyond just, niche speculation. They're being packaged up for serious product innovation on Wall Street.
Exactly. It's the institutionalization of the whole digital asset space. It's validating not just Bitcoin as maybe a store of value, but the potential utility in some of these other chains too.
Okay, right. Let's unpack this surge then. 155 pending filings. That's a lot. What actually changed? What structural or regulatory shifts made this land rush possible? Like right now, was there one big trigger?
It probably wasn't just one single moment, but more of a gradual structural relaxation from regulators globally. Our sources keep pointing to bodies like the US SEC and others around the world. They seem to have either relaxed or at least clarified the listing standards for these spot crypto ETPs, and that clarity gives the big financial institutions a much safer, clearer path to follow.
When you say clarified listing standards, what does that really mean in practice? Did the SEC just stop saying no as much?
It's a bit more active than that. A key piece has been implementing these surveillance sharing agreements. Basically, regulators need assurance that the underlying market for the asset isn't being easily manipulated. So by forcing exchanges to share trading data, the ETF issuers can sort of prove to the SEC that the price discovery is robust enough to support a regulated product. Getting those agreements in place, that was a major hurdle cleared.
That makes a lot of sense. Okay, but wait, if there are 155 filings across 35 different assets, doesn't that sound a bit chaotic? Should we be skeptical that regulators can even process that many, especially when some of those 35 assets are still in a bit of a regulatory gray zone?
That's a really important point, and yeah, skepticism is definitely healthy here. The high number shows intent, right? Not a guarantee of approval, but these firms are also building on a couple of other prerequisites that have fallen into place. First, you have the development of regulated futures markets, like the ones CME Group launched for Bitcoin, and now even Solana futures. That gives another layer of price discovery and institutional comfort.
Okay, futures markets. And what's the second prerequisite?
The determination of commodity status.
Right. For listeners who aren't deep in the weeds, why is being called a commodity so important for an ETF versus being called a security?
That distinction is absolutely critical, especially under U.S. law, which tends to influence global standards. If an asset gets labeled as security, it falls under a much stricter, more complex, and potentially blocking regulatory framework run by the SEC. But if it's deemed a commodity, it falls under the CFTC, the Commodity Futures Trading Commission. Their framework is generally seen as more suitable, or at least easier, for getting an ETF listed. So for assets like Bitcoin and now maybe Solana, proving that commodity status is a really vital step towards getting an ETF approved.
Got it. So the regulatory path is clearer. The prerequisites like futures and commodity status are kind of lining up. Strategically, then, this rush is about grabbing that first mover advantage.
Exactly. We're in this phase of the crypto cycle, sort of a bear market bounce maybe, but institutional interest is undeniably growing. So if you're a big firm and you can be the first to launch, say, an approved Solana ETF, you instantly capture market share and assets in a whole new category. It's become a bit of an arms race, fueled by product strategy.
Okay, let's focus the spotlight then on the two frontrunners, Bitcoin and Solana. Bitcoin's role.
Yeah.
Well, that's pretty established, right? It's the anchor, the foundation for pretty much any crypto product because of its huge market cap, deep liquidity, and frankly, higher regulatory comfort level. It definitely paved the way with those spot ETF approvals back in 2024.
Bitcoin is that store of value foundation, absolutely. But yeah, here's where it gets really interesting. Solana, sitting right there alongside it in the filing queue.
Why Solana, though? What makes it the standout altcoin here? Why not Ethereum or another big layer one? What's the compelling story for institutions?
Solana seems to have demonstrated a kind of distinct utility layer. The institutional pull, from what we gather, comes from its very high throughput, processing transactions fast and cheap, and also its rapid ecosystem growth. Institutions might be seeing Solana not just as another currency, but as potential infrastructure for high-frequency finance applications.
And the numbers back that up, don't they? We often talk about TVL, total value locked, for ecosystem health.
Exactly. TVL measures how much money is actually locked into DeFi apps on that network. Solana's TVL metrics have been strong, which suggests real developer activity and usage, not just people holding the coin. Plus, we saw that institutional comfort building when CME Group launched Solana futures. That's often a sign that serious players are testing the waters before bigger products come along.
Okay, so the market narrative might be Bitcoin as digital gold, Solana as high-performance digital infrastructure, both needing regulated access. Now, we should acknowledge the others in the queue, XRP, Ethereum. What makes their risk profile different right now?
Well, the sources suggest assets like XRP and Ethereum still carry higher regulatory uncertainty, but for slightly different reasons. For XRP, there's still the shadow of that long-running securities litigation. For Ethereum, even though it's widely accepted, its regulatory path seems less clear-cut than Bitcoin's, especially with questions around its move to proof of stake and how regulators worldwide view that change regarding its commodity status.
Right, which brings us to the big question, the so what?
Mm.
If we zoom out, what actually happens if, say, even a third of these 155 filings eventually get approved? What are the real-world implications?
For investors, the potential is fundamentally bullish. These regulated products act like huge funnels for capital. So the prospect of large inflows creates pretty significant bullish tailwinds for the underlying tokens, especially leaders like Bitcoin and Solana. And it helps cement that whole legitimization narrative, making crypto a more standard part of mainstream portfolios.
And for the traders listening, this means the game isn't just about charts anymore, right? You've got to watch the regulatory news flow just as closely. Anticipation around approvals is bound to drive speculative price moves even before launch. So traders should be watching for correlations, volume spikes, specific setups tied to filing news.
Definitely. And from the ecosystem perspective, it signals maturation. The institutional layer is finally getting built out. Now, more money usually brings more regulation, which could mean more stability, but it also shifts the dynamics.
The flip side of maturation. More competition between the ETF issuers, right? Maybe higher fees baked into these funds. And the risk of these tokens becoming, While commoditized, crypto might start feeling less like a wild tech frontier and more like another competitive financial sector.
That's kind of the inevitable trade-off with institutional adoption, isn't it? But we really have to stress the key risk here. A huge number of filings does not mean guaranteed approval. The risks are still high. You could see long delays, outright rejections by regulators, especially if some of those 35 assets include tokens the SEC is really determined to classify as securities. Or even if things get approved, maybe the market gets saturated quickly and the expected bullish impact is kind of muted.
Okay, so we've got this picture of a land rush, the reasons behind it, the surprising front runners. As we wrap up this deep dive, let's nail down the key things for you, the listener, to watch going forward.
Yeah, definitely keep a close eye on which specific assets beyond Bitcoin and maybe Ethereum actually get those first approvals. Solana and XRP seem to be in a real race to set that next institutional benchmark.
And then, once products launch, the focus immediately snaps to the fund flow data. How much money is actually coming in? And maybe more importantly, how fast is it coming in? That quantitative data will tell us if this bullish wave has real staying power.
And also, keep a critical eye on the token prices themselves. Ask yourself, is this ETF wave already baked into the current price? Or is there still room for an upside surprise when an actual approval announcement lands? Getting that right is key for strategy.
Okay. Now, before we leave you with a final thought on what a Solana ETF might mean, we just wanted to take a quick moment. If you found this discussion useful today, please remember that subscribing to the channel, maybe leaving a comment, engaging with the video, it genuinely helps us out. It supports the channel, boosts visibility in the algorithm, you know how it works, and it lets us keep making this kind of in-depth crypto content for you each week.
Absolutely, we really appreciate the support. Okay, so here's that final provocative thought to chew on. If Solana does manage to get an ETF approved, potentially ahead of many other well-known altcoins, does that fundamentally rewrite the market story? Does it shift us away from just Bitcoin dominance towards a real institutional pathway for a select group of high-quality altcoins? What really stands out to you in all this data?